All right, welcome to the Claims Hero podcast. Today I'm joined by Rachael,
Hello.
Liz and Ben.
Hello.
Hello.
Welcome. And we have a new setup, 4-person podcast.
Very exciting.
What could go wrong? And today we're talking about everyone's favourite topic, which is the General Insurance Code of Practice. Importantly, the redrafted Code of Practice, which Claims Hero has done a submission for. So for those who don't know, the insurance industry, particularly around claims management, is what's called self-regulated, which means they have a code of practice which they write and implement. The last one was done in 2020. And since that point, we have had our fair share of natural disasters. We have also had our fair share of insurer misconduct. We had a parliamentary inquiry after the 2022 floods, I think it was. And obviously they found a lot of deficiencies in the way that was managed. The code also has a mechanism for a review by an independent panel, which also occurred, and they made a significant number of recommendations. The Insurance Council of Australia have put out their redrafted code. Their claims, I'll read these, of this new redrafted code is that it creates legal enforceability. So for the first time, instead of saying in the policy we will comply with the code, but we're only essentially liable to the Insurance Council of Australia, it now makes the least enforceable provisions of the code part of an insurance policy that a consumer takes out, or at least what they claim, which means that if an insurer were to breach those obligations, an individual consumer could enforce them. The other they've introduced is an automatic claim acceptance after 12 months. So if they haven't made a decision after 12 months, then they will accept and pay the benefits associated with the claim, in theory. Stronger support for customers experiencing vulnerability. And essentially they introduced this idea of extra care and an extra care framework. Broader family violence protections, better claims experiences, and terminology like trauma-informed claims handling is something the industry is talking a lot about. And then higher standards for expert reports. At least that is what the media release from the Insurance Council of Australia has said. We have reviewed it. I think it's safe to say that we're very disappointed with the code, but we're not the only ones that are disappointed by it. I saw that the Financial Rights Legal Centre, including a number of others, had also put out a statement about the fact that the redrafted code hasn't picked up a lot of the recommendations from the parliamentary inquiry or the independent review that was undertaken by the panel that they appointed to do it. So what that means is that there's a bit of frustration. They specifically said, based on their research, that insurers have either partially met 51 recommendations of the independent code review and the parliamentary flood inquiry 40%, and have not met 41 recommendations, 32% at all. So quite a lot of recommendations made to improve this code that weren't implemented in it, which has led, no doubt, to a lot of feedback from the Insurance Council of Australia. The purpose of today's podcast is to have a little bit of a conversation about our feedback that we put forward, but also how these codes operate in practice for consumers. And also talk about how, if you are a consumer, how you might be relying on the code or relying on an obligation within that code to get the insurer to do something. And then why it's so important that we're not just saying the code's enforceable in principle, that it's actually enforceable. Because we do see a lot of the time there's some challenges at the moment because the code's not enforceable by consumers. The obligations, while they might be great in practice or in principle, consumers can't actually make insurers do that. So with that as a starting point, I thought we'd start by talking about the existing code. So that one came out in 2020. I remember implementing this when I worked at Suncorp at the time, which is an interesting exercise if you work in insurer, because you get given this code from the ICA that says, here it is, here's all the obligations, go and implement it. And what you start to do is pull together all these people in the business, reading the obligations and going, right, what does that mean? And now how do we actually implement that obligation within the business? what technology do we need, what systems do we need. And to be honest, it actually becomes quite a negotiation internally, because you might want to say, oh, there's vulnerability, we want to put a flag in, and technology says that's going to cost $3 million. And so actually, you know what, we won't put a flag in. Maybe we don't need that. We'll just put a procedural policy in. So sometimes you see a lot of the issues start to rise in that implementation across the industry. Ben, from your perspective, I mean, obviously you've been managing lots of claims where these code obligations apply. What are some of the things that come to mind for you in terms of the current challenges with the existing code?
I think over the last couple of years, speaking to a lot of clients, they're aware of the current code of practice. So it's not necessarily an awareness thing, but it's actually how they then implement it and use it to be able to assist them in managing their claims. So probably one of the big things I've seen with clients over the last couple of years is they will go to the insurer and say, you know, I'm aware that there are timeframes associated with the claims management process. They will identify those timeframes, and yet the insurer will kind of just push past those timeframes because there's no actual sort of ramification for missing those due dates. So for these clients, timeliness is one of the most important things as part of their claims. They're constantly concerned about delays. They might be out of their homes. The property is worsening in damage due to a time sort of frame issue. So look, in terms of being able to actually get things done in an appropriate amount of time, there's nothing in the code that really enforces those timeframes. So it's probably timeliness, and the code doesn't really assist the consumers from that perspective.
Yeah, that's right. Rach, what about from you?
I'd say it's similar to Ben there, but more on the enforceability side of things. So like you say, many clients are aware of the code, they know it exists, obviously as do the insurers, but they're reading this code and they're seeing things that maybe, you know, relate to them, and they're trying to raise this with the insurer, but in actual fact, they turn around and say, yeah, but in your policy, it does say this. So, you know, it's almost just worthless to them. They know it's there. They know it should be there for them, but they can't do anything with it. So it kind of just, goes against them in a way.
Yeah, I think that's right. For me, it's that point. I've actually been shocked since I started claims for just chronic non-compliance with this code. Like, I think it's an embarrassment, truthfully, that there's a lot of compliance that is really surface level, where they might try to send an automated email or something to meet an obligation, but there's nothing meaningful where, you know, it might be, say, provide an update every 20 days, right? Which in theory is meant to be provide an update of where the claim's at, you know, what's outstanding, what are you trying to do? But the reality of what you get is like, we're still investigating your claim as an automated email or something that goes out. So there's no meaning to it. I don't think people have really, insurers in particular, have implemented it in a way that it becomes meaningful. And then when they breach or they don't do something, there's no real remedy available within the code. You can make a complaint to the Code Governance Committee. My thing would be, we've made many submissions there and got as little as a thank you. We'll consider that as part of our broader investigation. You get no update after making a complaint to them or showing them that there's systemic non-compliance. So I genuinely think, particularly at a claims handling level, like the individual people managing the claims, short of their online module they probably do once a year, I don't think there is a real understanding of the code. And then I think for a lot of the obligations, they're unclear. So we get from one insurer to the next, and the one that jumps out to me is that you've got to disclose information if we relied upon it. But insurers tend to forget that there's other obligations that apply at the same time. So they tend to, like, if they want to limit what they're providing, they forget the Privacy Act, and they'll just go, oh, we've given you everything we relied upon. You'd be like, well, we know you have this document. We didn't rely upon it. And it's like, what does that even mean for an insurer you didn't rely upon it? Because if you're looking at it in a complaint response, or you're looking at it when you made a decision, is that relying upon it? Is it not relying upon it? Even I don't know. So it's wording like that becomes the out for the unethical insurer in all of this, which is why it's really important, if you're redrafting this and you actually want to get consumer protection, that you sort of have to address those underlying issues that exist within the code. Liz, you worked for a long time in an industry that didn't have industry codes. It sort of had statutory legislation that you had to follow. How do you sort of reflect on, I guess, your time working in an industry where you had legislation that you had to meet versus, say, an industry code?
I think when you come from an industry that's so heavily regulated, the rules are very clear. The legislation, whilst sometimes may not be as clear as we would like it to be, but for the most part, there's minimum standards, there's actual, key information that needs to be provided or exchanged between the parties to be able to, enforce those obligations. Yeah. So it's a very different environment compared to a self-regulated voluntary code of practice.
And it's very strict if you breach those because it's legislation. And if you think about personal injury, and I always use this because while there's so many flaws in the personal injury schemes at times, if you think about Queensland CTP, mandatory disclosure. So you get a document, you give it to the other party. And as an insurer, or I've been on both sides of that fence, you kind of hate it because sometimes you get information that's not favourable to you and you have to disclose it. And the joy of that is it helps resolve a dispute.
Absolutely.
Because if you get a report that's not great and you give it to the other side, then suddenly you've got a weaker position, you're probably more likely going to negotiate it out. Here, when no one's represented, currently the code and the redrafted code thinks that, wait a minute, no, insurers should have the power to withhold information that's not relevant to them. Ironically, their policies with consumers says the complete opposite for individuals. You have to give us the information. If you don't, we'll decline your claim. So it's this asymmetry of obligations between the two. And I think for me, that is at the core of self-regulation.
Yeah.
Right? If I said to Ben, you've got to write legislation to control your own actions, you're probably going to write them so they're a bit favourable towards Ben and how Ben wants to go about life, And I give the example of, speed limits, right? And you think about how these codes are written. It says, we will consider the speed limit as we drive down the road. That's what the obligation is. And then they go, okay, yeah, well, that's good. Not, we will set the speed limit at 60 kilometres an hour. If you go over that, you will get fined. If you do that enough times, you will lose your licence. That results in a change in behaviour. We will consider the speed limit I go flying down the road and go, well, I considered it. Well, yeah, I considered it. Okay, I'm sorry. I went over. There's no consequences to any of this. And the existing code for that reason, I think, offers very little to consumers on a day-to-day basis. And even if you did want to try and get, say, AFCA to make an insurer comply with any of those obligations, half the time, the compliance or the rectification of the compliance issue is long past when it was required. So we will correct errors and mistakes. But then if you're correcting an error or mistake 12 months later, it's not really, it's too little too late at that point. So, I have very strong views around self-regulation versus actual legislation. And if you look at the actual legislation that insurers comply with it, at the moment, they've got to act honestly, efficiently and fairly. But the regulator has real teeth in terms of being able to take them to court. We've seen public court cases against Huey. There's one with Hollard at the moment. But they also have requirements around financial returns and all these other sort of obligations that, Liz and I worked in that space before Claims Hero, and you wouldn't miss it. Trust me, like internally, you had so many controls, safe checks in place to make sure that you do not miss those, because if you miss those, you might lose your license or, some other significant consequence would happen. Here, if you breach the code, you might record it somewhere internally that's then going to go to an annual return that says how many breaches you had, where your identity as the insurer is going to be protected and no one's going to know if it's your breach or someone else's breach, or if, if the code governance committee comes and does an investigation and you apologise and quickly rectify it, you might not even get named in that process, or you don't even know if they're part of it. Or if the code governance committee does a review and you fail miserably, they don't put the names of the insurers in it, so you hide behind it. And I think if you, show me the incentives, I'll show you the outcome. It's a little wonder that these insurers don't necessarily try that hard to comply with these obligations. Probably a good segue into the redrafted code, which the ICA has come out and said, yes, we've nailed it, we've done all these great things. I thought we'd start by sort of going around the room. Out of 10, what do you kind of give the redrafted code and why? Ben?
I would probably give it a 4 out of 10. I think the fact that it's contractually enforceable is a positive step in the right direction. I think the actual wording of the code itself doesn't actually provide those protections for the consumer. So look, it's positive, but the actual practicality of it isn't quite there.
Yep. Rach?
I'm coming in at a solid 3 out of 10. Now, I think on the face of it, it's almost like clickbait news. You see the headings, you see this is what we're improving. You're a consumer, you see that and you go, brilliant. I'm getting backed, I've got something in my corner. And then when you actually read through it, you read through the terminology, the loopholes that are there, just how easily it can crumble for the consumer if they want to use it. Yeah, it's useless on that front. So I think what they're trying to do in principle, great. But actually what you're looking in and the way it's all been drafted, yeah, 3's a very generous score, I'd say.
Yeah. I think if the media release was the code,
well, this is it, right?
You know what I mean? Yeah, it's going to be enforceable. You're going to do all these great things. Brilliant. Liz?
I'd have to agree with Rach here. I rated a 3. Agree with Ben in terms of, the idea or the philosophy of contractual enforceability is great. I think the extra provisions around customers experiencing vulnerability is also really good, and the extra care framework is also great in principle. But the level of subjectivity in the language of the code, as well as, the level of legal jargon contained in the code, I think really diminishes the benefits of that.
Yeah.
And Luke, how about you?
Somebody who spent days and days reading it and rereading it, I was so frustrated by the whole thing because I don't know if it's got any better than the last one. And sure, you say it's enforceable. There's so many exceptions there, so much legalistic language around it. Yeah. I don't think it's enforceable. And even if it was, they're written in a way that, we will have a process in place to do X. It's like I'll have a process in place not to speed.
Yeah.
So then if I'm speeding everywhere, the rectification for a consumer is what? That I go put a process in place not to speed. It would be comical if it wasn't so serious. So for me, I'd probably give it a 2, and I'd say if you don't fix it, it's time for ASIC to do legislation and write it in a way that consumers can actually get protection. Which is why, to be honest, we started out with the idea that it would have been written in a way that we could just update some of the terminology, give some feedback on specific obligations to make it easier for consumers to understand. And it honestly got to a point where I was like, if we did that, this is going to be hundreds of pages. Because the more you looked at it, the more issues you saw, the more exceptions you had to look up. Like I think someone was playing Thesaurus Bingo when they were writing this thing of like, how many weird words can we use in this thing? And the media release says, we did a consumer review.
Well, this is what Liz and I were saying earlier. It's arguably worse than the previous one because all these new terms that they've brought in, all the new definitions, it's actually just complicated it so much more. It's provided so many more loopholes for insurers to go, that's a quick get out clause, and it's harder for the client to read. You can't make sense
and that's
of
probably
it,
the biggest
honest.
issue. It's like, well, you are all obviously learned people who have worked in the insurance industry or, in the legal profession for years and years and years. So even if it's confusing for you guys, well, then how does the average consumer that perhaps doesn't have that background, how are they meant to decipher it? How are they meant to actually go through and go, so what are my rights?
Absolutely.
What is the outcome if they fail to do X?
And we know
they have no idea.
We know that insurance literacy is actually very low. So if people struggle to read their PDS as on top of, this legalistic language, it's going to be really hard for consumers to actually understand what they're entitled to, but also what they can do about it if there's non-compliance.
Yeah, look, if I could put a bet on it, I would say some lawyers got paid a lot of money to redraft this because there is an exception for everything and there is a loophole for everything, which means you have no enforceability in my view. We therefore decided to do a principle-based recommendations around how you should redraft this thing because I think the whole thing needs to be largely redrafted with a very different mindset that whoever drafted this went in with, which is not about how do we give the perception that you have enforceable obligations and give the perception that we're going to do certain things and do it with the lens of like, what is the bare minimum as an industry we're going to stand up and say we're going to comply with or we're going to give a consumer and then put that in the code in plain English, take your exceptions, chuck them in the bin, make the whole thing shorter and then say, if we do breach it, we're on the hook for the reasonable or reasonably foreseeable consequences of it. Because I must admit, when I started reading the legalistic language around enforceability, I started to learn things about the law, about what certain words meant and why they were in there. Because I had to go, well, what is the natural consequence of a loss? you know, and it's like, oh no, we wrote it so normal consumers can. Okay, great. Let's walk out on the street and go, hey, could you tell me what, in the context of losses, what natural means when we put that in there? No one's going to know.
Well, no,
no one's going to know.
How does a loss arise naturally?
Yeah.
This is it. This is when people start going, cyclone. That's what it is. That's what a natural loss, would come to most people.
Yeah,
Not
that was
the-
natural. That happened. And the reality is what it does is just narrows and narrows it down to foreseeable losses to the insurer at the time for the breaching of that obligation, which means, again, you're getting so narrow down that even if it is enforceable, you're not going to get anything out of it in the end of it. It's probably going to get rectification with compliance with a really loose obligation at the moment, which is really nothing. So 35 principle-based recommendations. The themes for us were replace subjective wording. So there's more than 100 times they use subjective wording, all that have different meanings. As someone also who worked in an insurer, that is a nightmare because we have to interpret what that subjective wording is. Then we have to go put controls in place to make sure that we can meet that subjective wording. It's a complete nightmare for consumers. Everyone's reading it differently. And then when regulators come in to enforce it, or judges, they're also going to be taking another interpretation of it. So it makes it a complete nightmare. We also focused on independently verifiable obligations. And that's kind of what I was talking about before. Don't write so that it's about a process or something you're going to do, right? Like, if we reasonably believe, because you could never enforce that. Well, that's why we've got to get inside your head to understand what, or try to then construct everything around it to understand it. Instead, do it as an outcome-based obligation. We will give you a copy of your PDS within 5 days of you taking out the policy. Then we can look and go, was that provided within 5 days?
Yes or no?
Yes or no? Did we give you a scope of works that was we will give you an unredacted scope of works, or we will give you a cash settlement that is sufficient for you to undertake the repairs. Okay, we can now independently verify whether or not that obligation was met.
Well, it's measurable, isn't it? You can actually say, yes, that was done, or no, it was not done.
Yeah.
It then takes out of the whole equation, someone for the insurer, a claims handler, claims manager, might be their first year in the job, or it could be someone who's 10 years into the job. So the level of subjectability between those two people who are actually making decisions is so broad. So reasonable could be such a broad spectrum. So it just removes that ability for there to be such an enormous amount of subjectability.
It's kind of why I look at it and think it's comical, because to have an obligation, we will have a process in place to do X. You should have one for every obligation. That should be an obligation that will have a process in place to do a certain activity. It's like, no. Have the outcome based and then have a process, systems, controls in place to meet all of those obligations, not just one just don't have a process for it, because then you don't follow it and it's like, okay, well then now what? That consumer, you had the process, well done, you don't follow it, no one follows it, no one knows where the process is, no one's read it. It's a nightmare.
In an ideal world, the obligation should say what the insurer is going to do, when they're going to do it by, and what's the consequence of not doing it.
100%. Yeah. And if you're going to use subjective language, minimum standards.
Yeah.
We will provide you extra care. At a minimum, that means 1, 2, 3. Because for consumers, that gives some certainty of the minimum standards. And then if some insurers want to go above and beyond, brilliant.
That's great.
Go
Good
for
on
it.
them.
But what's the minimum standard this industry is signing up to when it comes to these consumer protections? The next one for us was around enforceable protections, because it's really important that if you have these obligations, they can actually be enforced. The term, you could have knocked me off my chair when I read an obligation that said, if in the extent to which there's an inconsistency, the policy prevails. And I thought, oh my God, this whole thing's a joke. Because as an insurer, I can then just go and write a policy term if I wanted that's contrary to the code, and now my policy is what is enforceable. And to me, I'm like, that makes a mockery of the whole thing. Because if you're signing up to the code and you're giving people enforceable obligations, yet the policy prevails, then this is all for show.
Well, it is, yeah.
So whoever put that term in there, it's like, let me tell you, of some insurers out there will intentionally put policy terms to limit some of the stuff the industry is trying to do around these obligations. I've seen it. I've dealt with Budget Direct who will tell me over and over again about their interpretation of the Privacy Act and their interpretation of the obligations around giving information, and they'll redefine it 100 times. If you're going to give an out to certain insurers to be able to use a term like that to go, oh, well, it's inconsistent, therefore the policy prevails, it's a joke. And if you leave that term in there, then we can't have any self-regulation of this industry. It has to go to legislation or regulation. So they need to, as we said, come up with the bare minimum they're willing to do and put that in the code. Now, that's probably going to be embarrassing to them. It's probably going to be embarrassing, which is why they don't do it that way. Because really, if you actually break down the obligations they've got at the moment to the bare minimum, there's not a lot in there from what are the actual obligations that have teeth that actually give the consumer a guarantee that something's going to happen. Because a lot of the time, it's guaranteeing that the consumer's going to consider something, or if they believe something, then something might happen after that. And I think that that's the challenge for the industry, is to go, well, what's that bare minimum? And what's the bare minimum you're willing to enforce, as in you're comfortable that anyone who signs up to this code, or any of your members in the Insurance Council of Australia that will sign up to this code, will provide this to all customers. At least then we have a minimum standard that applies. Because when you have legislation and regulation, that is the minimum standard. Whereas like with these codes, it seems like for a long time, they've really gotten away with writing them this way, which is a trick. It's a trick because if you don't read them and you don't understand it, and if you haven't worked internally to see how these things are negotiated, they become meaningless. And, you know, a good example I'd give of that, and I had this across multiple organisations, right? And this is RG271, which is about complaints. And it says, a good example of that's RG271, which is around complaints, and it has a definition of a complaint there, which is an expression of dissatisfaction with an implicit or explicit expectation of a response. And my position to simplify compliance was to say to the claims teams, an expression of dissatisfaction is a complaint. We record it and we action it appropriately. I had so many arguments, negotiations with heads of claims or compliance people arguing over, well, what is an implicit or explicit expectation? Oh, if they're doing this, is that really them wanting a complaint response? It complicates the whole thing, right? It gives them an out. And now, why were they motivated to argue that? Because they didn't want to have to record all these complaints. They didn't want to meet those obligations. Liz, I know you had similar conversations on that exact point. And this is the exact reason why I almost get a twitch when I see this subjective language, because I'm like, that was bad enough with like just a definition that in my opinion was very clear. And ASIC actually gave an example to say, the example of when someone doesn't want a response is where they call up their branch and go, hey, I was just down at your local branch and the ATM wasn't working. And they go, okay, thank you, we'll get someone to look at that. Now, they're not expecting you to call them back up and go, oh, hi, you know, the ATM's working now. But if I've got an active insurance claim or a policy and I'm calling up and making an expression of dissatisfaction to an insurer, give me an example like that. There isn't one. Of course they want a response. Yeah. And what I was trying to encourage was that for our frontline staff, that you take those expressions of dissatisfaction, you try to resolve them. And you can sometimes do it on the phone. And then it's just you recording that a complaint was there and it's resolved at that point. But these high-ups would refuse to simplify it to that because they wanted the out that if we ever caught, or internal audit caught, or compliance or someone else caught that they didn't record a complaint, they could go, oh, well, was that really implicitly, explicitly? They were just saying X. That they didn't want a response to that. So it's just a nightmare, right? So you breach numbers, everything that you're going to be recording all goes down at that point. The other ones were around transparency and accountability, which, you know, we sort of immediately touched on when it came to the issues with the previous code. It's about, we need some transparency in here, which is about sharing of information. There's massive information asymmetry. It's hurting consumers a lot. I think it causes a lot of mental health issues for consumers. And really what we were also focusing in on is that if you're going to have this rubbish subjective language in there where you need to believe something, well, you need to document it and you need to provide it to the customer. Yeah. So if you want to be lazy in your wording, then you are going to have to, you should pay for it in how you implement it, which is to say, well, yeah, we're going to have to reasonably believe that, and then we'll explain to you why we reasonably believe that to be true, and then we'll give that to you. Or when it comes to information, like they've still got the one on there, information we relied on.
That's the one that's frustrating. Because if you were to put that in a different setting, right? So say it's been your medical practitioner tells you, no, you don't need this operation. 2 months down the line, turns out you really did need this operation. You're now lying in a hospital bed, and you say, could you, give me all the test results, everything you relied upon to not send me for this operation. They go, well, here's some, but we didn't rely on any of this, so you don't need to see this. You'd be sitting going, what is wrong? What else do I need to know? You'd be panicking. But because it's done almost behind closed doors, it's not in that, as severe circumstances, if you like, it seems to be okay. And also, if you've seen something that you've not necessarily relied upon, you've read it, that's still up here. It's still part of the decision making, whether it's to go another way, whether to get an offer in quickly, just get rid of it before this information comes to light. That's still been relied upon. It doesn't matter how it's come into your decision making, it's still there. So the customer should know and should be entitled to all that has been reviewed, looked at, properly relied upon, if you like, just so they know. They have a right to know.
Documentation that's been obtained
throughout the life of the
throughout
claim.
the life of the claim, unless a legal
Unless there's
exception
an
applies
exception.
to it.
I had an example the other day where I had an inquiry call up about their claim. They were concerned that what they were being offered in terms of a cash settlement was definitely underquoted and undercut. So what had happened was basically a car had run into their property. So quite significant structural damage, which, potentially has latent damage if not actually assessed and reviewed properly. What they were provided with was the proposed scope of works to then rectify and repair the property, but they weren't provided with the engineer report that should have substantiated that scope of works. Now, the argument was, well, the scope of works is what we've relied upon to provide you with a cash settlement, but the engineering report, we didn't necessarily rely on that. We relied on the scope of works to facilitate that cash settlement. The engineering report absolutely would have been relied upon to be able to substantiate that scope, but they just won't provide the engineering report. So how are they to know if that scope of works is actually sufficient, whether or not they will actually be able to, rectify the damage that's occurred to the property, or will they be left significantly out of pocket when a builder comes and an engineer and they go, wow, there is a lot more damage going on here. It's going to cost a lot more.
And how does a consumer actually know what's been relied upon in the first place?
How do they know what information they even have?
Yeah.
How does anyone know? It's almost the joy of being an unethical insurer is that no one knows. So what you give them and say, that's all the information we relied upon, there you go. The only way you'd really find out is if someone like an ASIC came along and said, give us access to your system and we'll have a look at what you've got. And a classic example of my friends at Auto & General or Budget Direct or Qantas Insurance or anyone else who is with that insurer who should seriously consider why you're with that insurer, we found out they actually had a system they used to communicate with their suppliers. So they're experts, they're independent experts. Even though they have a builder-led panel and they have nothing to do with those experts, but they do have a system that communicates with them that we're not entitled to because they haven't relied upon it or it's not privacy information or whatever other exception they can find. This is what happens when you have a system built on maintaining an information asymmetry with consumers. And I can tell you what happens in those systems because those whistleblowers that have come forward to me and told me about it, thank you very much, appreciate that information, is you will have an insurer, wonder which one this is again, who will have on their system, they have policy notes and claim notes. And they know people often ask for their claim file, not their policy file, not the whole thing. So what do? You put all your bad notes on the policy side of it so that if they ever ask for the claim notes, you just give them the claim notes because that's what they asked for. And then did you rely upon them? Well, no, we didn't rely upon our previous notes. All of it is bullshit. All of it continues to reinforce the asymmetry that exists within the industry that has allowed them to make way too much money and rip consumers off for far too long. So to the Insurance Council of Australia, I say to you, is this what you actually believe is required to keep premiums low? Which they'll probably say yes to. And then I'd say, brilliant. Show me where you've lowered premiums after making a lot of money in a year. Because when I was at all these insurers that had shareholders, you know what we got? Dividends, big ones. Thank you so much for all that money you saved not paying Betty down the road because you withheld a report. You pay them out as dividends. You don't lower the premiums. Show me the evidence where you lowered the bloody things. Because anyone who's paying it, who's who had a renewal come through and they're like, hey, good news,
Premium's gone down.
premium's gone down. Absolutely no one, because it's all rubbish. And I think the reality is that they want to make money, they're profit making, they're commercial businesses. Let me tell you, when you're internal, it's where most of the focus is. So when you have self-regulation, you give them an opportunity to put something like relied upon in the wording, well, they'll put it in there because it helps them a lot. It also suppresses misconduct. It increases disputes. Because if I'm withholding an adverse report to me, I'm in a stronger position. If I'm withholding the communication I had with the expert that completely undoes that they're independent at all because I've told them to change things, or the information that we've obtained on some where you actually fraudulently doctor the responses of your experts, suddenly you wouldn't go to AFCA and you wouldn't go to determination because you know you're going to lose, and you know you're probably going to end up with an ASIC referral, and you're probably going to settle the claim. So the truth is, for ASIC, but also for the Insurance Council of Australia, just start with an obligation that you'll give them all information that you can that's relevant to them, relevant to the claim that you obtain, the documents, and just watch how the complaint numbers will go down and settlements go up. Now, it might cost you a little more, but, you know, I'm sure we don't want to make money ripping consumers off, do we? The final recommendation that we came up with, as a broad category, I should say, is that to exclude external reference material. Again, I can't work out if the ICA is being sneaky and like if they're intentionally trying to just be like, oh, I've got a way to trick people. Let's put an obligation in that we're going to comply with an external guide that we can change at any time. And then if we trick ASIC into approving the code, then at any point we can just go change that external guide. So any obligations that's contained within that guide, even though we're saying they're enforceable, we can actually change those at any point. And we explicitly put in there that, you know, they're subject to change. What are you doing? Like, what are you doing? Like, what's the point of an enforceable code if you're going to exclude certain provisions and then have also external reference material, like quasi saying it's enforceable obligations that you can just change at any point? That also just include all this subjective language, not subject to review. They've been through no consultation. ASIC hasn't reviewed them or approved them.
And then it allows for potential cherry picking to be able to go to those external sources and go, all right, so we have to refer to those external sources as a bit of a guide as to what we should implement. Then they go to the external guide and they might just cherry pick a couple of points that suit them.
Yeah. And again, it's like they've had the ICA expert standard guide out for a while now, and we updated our templates to say to the insurers, thank you for saying that such and such is going to attend the property. Could we have their qualifications? Oh, you're just like you're asking silly questions. Yeah. Like just focus on the assessment. Let us do it. We're like, well, the guide literally says that you will, you know, have people who are suitably qualified. You'll provide that information to consumers. Could we have a copy? And they're like, you're now refusing access to the property. Are you? Well, we're going to have to cancel the claim, or we're going to have to cancel your policy, or who knows what that threat is. It is comical.
And it's not just the expert standard, it's the extra care framework around customers experiencing vulnerability. That's a non-binding framework. It explicitly says in the redrafted code that it's not binding for insurers. So, you know, yes, in principle, it's great around, you know, additional family violence provisions and you know, additional trauma-informed decision-making and things like that. But if an insurer is not going to be bound by it, then it makes the whole thing meaningless, and also just reduces and diminishes the consumer protections that sit behind it.
Especially those who are really relying on those, you know, things that are in place to help protect them and empower them to be able to move their claim forward. And actually,
and this is stuff that we see on a daily basis. A lot of our customers, a lot of our clients are experiencing vulnerability in one way or another. So these are really important provisions and obligations that are just completely watered down because they're excluded from the code.
Oh, 100%. And the current code already has things around vulnerability. And again, Auto and General, Budget Direct, Qantas, Insurance, if you're with them. This is how they treat vulnerable customers who have an issue. We had a customer, extreme financial hardship, struggling to pay their mortgage because Obviously, they've got a significant claim. They're living out of home, a lot of additional expenses. We're in AFCA waiting for determination. Hey, could you just release the funds that you're currently offering, which is your best day in front of AFCA is that money. It's going to relieve the financial hardship of this poor gentleman. Could you just release those funds to him to, reduce his vulnerability? No. No, we're not doing that. But if he wants, we can pay the settlement to him and he can resolve his complaints. So not only will we know about your vulnerability, we'll use it against you, which is great. Now, that would be fine if it was a once-off, right? And, when he was so vulnerable, he went to sign it and they put a deed of release in front of him to say that he could never talk about his experience, despite the fact that the amounts they were offering at the time was, the majority of it was in policy terms, to the point at which he couldn't sign it because he'd already spoken to the media. And they still didn't offer the money. He had to go to determination. And that's an insurer that was already bound by the vulnerability obligation. So let's give them another guide. Let's give them another guide that they don't need to comply with. Or another example where, they're aware that the person is vulnerable. They're living outside. They've got a medical condition, hypothetically in a house with mold. And can you give alternate accommodation? Well, we'll only give it to you if you let us commence the repairs. And it's like, well, the whole complaint that's in front of AFCA was on the exact point about whether that was sufficient or not, and also that you're only offering to do half of it. And if that wasn't enough, there's another example with this same insurer that's already bound by a code around vulnerability and all these obligations, where the consumer they're known to be vulnerable and they just keep missing the rental payments on the date. And what's worse is the property is being rented through the place she works. So she negotiated a brilliant rate on this rental. The insurer refused. We just said, please pay the money to her so she can pay the rental agency on time. No, we're not doing that. Then they proceeded to miss the rental payment over and over again. And every time we said, you're causing her stress, she's vulnerable, she's a single mother with young children, this is her place of employment. Can you just pay it earlier? No, we'll pay it when we pay it. We've paid it now, move on. And again, this cycle continues.
And they're meant to be flexible. They're meant to work around the vulnerabilities and what is important to the consumer, the insured, and particularly around temporary accommodation. It's one of their biggest fears is becoming homeless. They can't move back into their properties, so they're in alternate accommodation for that exact reason. And then when there's payments that are late, well, then the person who is renting out the property, at the end of the day, they just want their money to be paid. So if there's no money coming in to actually facilitate that rental, well, then they do face eviction and then they do face homelessness. And these are people that have young kids with various needs and things like that, but they genuinely don't have support systems in place where they can become homeless.
And this is where it all comes down to culture and what some insurers are willing to invest in it, right? Because if we look at the Auto and General Budget Direct, Qantas Insurance, if you're not getting the hint, take the hint. They clearly don't empower their people to do corrective action around vulnerability or to spend money. It costs money. Here's the thing that you seem to not understand. If you want to look after vulnerable customers, it's going to cost money. At least in part. Being nice to customers is a start, and that would actually go a long way around vulnerability. But to do really good things, it costs money. And to call out an insurer that actually does good things is actually Suncorp. Their vulnerability program that they run is by far the best. The team that they have in place, the person who manages it, they truly care about people. I have seen them do things for vulnerable customers that I have seen no other insurer do. And I'm a little bit biased because I used to work there and I know what that company was like when I was there and you worked there. And if you talk to anyone who previously worked there, we all talk about the same thing. It's like, they do genuinely.
They want to do the right thing.
Exactly. And you can see that in their vulnerability team. Now, that's not to say they get it right all the time. It's not to say that they haven't mistreated any customers. That's certainly not what we're saying. But when it comes to vulnerability, identifying it and then empowering a team to actually go in and help that customer and to change things, by far and away the best. Miles ahead. And I'd say to Suncorp, keep doing it. But for God's sake, advertise that to your customers because the literacy of consumers is that they think all insurers are the same. And what we're learning is that Auto and General, Budget Direct, Qantas Insurance, for example, is not the same as other insurers who do the right thing, invest in actually looking after their customers. And when you make a claim, you're not the enemy. It's not like, oh, how dare you? Some of these insurers act like when someone makes a claim, it's like, they found it out. It'd be like if you found out your partner was cheating on you because they've made a claim. It's like, no, something unexpected has happened. They're covered under a policy, and it's time to turn up and just do the right thing at that point, not try to save every cent you can.
Most of our clients say. They feel like they're being vilified for an accident that happened. It's like they're being made out as if they caused the damage and then they're being told off for doing that. And
there's a lot of skepticism that sits in there. It's like, if I ask for that chair to be replaced, it's almost some insurers go, well, there can't be anything wrong with it. They're trying to push the boundaries. Of course you want that replaced because you want more money. It's like, no. And part of these vulnerability teams who are quite good at dealing with consumers who are vulnerable is to actually drop all of that and treat them like human beings. Treat them as people who are just having a claim and you're trying to actually resolve.
And I think that's when the minimum standards thing that we talked about earlier would come in really strongly here, because you can put this in place and different insurers are going to take it and run whatever direction they wish to go. Whereas if at least you've got minimum standards throughout, then they're all supposed to be bound by something. There is a minimum threshold that they have to get to. They can't just take every loophole and go.
Well, I think it's a good segue into, I just want to sort of deep dive a bit on this subjective language piece that we sort of touched on, because the ICA come out and go, it's easy for consumers to read and we've drafted in a way that, it's enforceable. And it's like when you start to look at the language that's in it, some of the subjective language, appropriate, reasonable, reasonably, relevant, complex, commercial in nature, promptly, suitable, sufficient, necessary, best interest, consider, believe, determine, assess, review, satisfied, if we are satisfied, significant, material, regularly, timely, as soon as practicable, without undue delay, may, where appropriate, where practicable, best endeavours, if required, outside of our control, impacts our ability, and the list goes on. The combination of all of these is like, what does it mean? And what I can tell you it's going to mean is for every insurer, something slightly differently in all of that. And to your point, Rach, how do you enforce those things when it's about the cognitive mindset of an insurer?
Yeah.
What they believed.
Or if we consider.
Yeah.
If we consider. The one I find fascinating, and it's a challenge for us a lot, is around authorities. Yeah. And it's like, they go to great lengths to sort of talk about how you appoint a nominee and that they're going to respect that. And then they'll do a couple of things that, again, are around subjective wording, which make this, very difficult, is they'll go, we may get you to sign an authority which may include 1, 2, 3, 4. And then at that point, we'll respect your nominee. And my point is, just put the minimum standards in there that it has to include so that consumers know how to just give an authority that meets the requirements of the industry. It's not that hard. I mean, they're trying to protect probably some of their commercial interests and the Privacy Act obligations. Then say that must include the name of the person you're appointing, who they work for. If they don't, what's their address, what's their phone number, so that when they call up, you can actually verify you're talking to the right person, and then you have to sign it, and we're going to confirm verbally that you've done that authority, and then at that point, we'll respect it. Full stop.
That's the problem. It's not being respected, and this isn't helping it be enforced.
Well, no, because then someone goes, I've got something. We'll add an extra bit on this obligation, which is that, we will respect it unless we think they're not acting in your best interests. Well, let me tell you this. To insurers, you're not your customers' parents. You don't have a fiduciary obligation. You're not aware of their personal circumstances. So you don't know what's in their best interests.
No, and the clients have instructed advocates, whoever, to act on their behalf because the insurer is not acting in their best interest. So why are they getting someone in? If they were acting in their best interest, then carry on. They would deal with it themselves. But they're clearly not. Yeah. So they need to get other people involved. And then when that's not being respected, it's just breaking it all down again. So there's no point.
And ultimately for a consumer, and the crazy part is that bit about best interest is in the vulnerability section, which is about, I think it's in the vulnerability section. If not, it's in the nominee bit. But it's about actually vulnerable customers acknowledging that they do need help and assistance in it because they're overly stressed. And to then put an exception where, acting in the best interest, like we're in the best position to know whether your nominee is acting in your best interest. Yeah. And ultimately, how a customer wants their nominee or representative to act is up to them. And for an insurer, some of the suggestions we put in here is no, the only limit should really be if you try to contact that person, the nominee, and you can't get a hold of them, with some limitations, i.e. you try in writing and by phone and you leave it a reasonable amount of time, then it would be appropriate. However, what we can tell you at the moment is that insurers currently say they'll thank you for your authority. We acknowledge that. We won't contact your customer. Then every supplier that they appoint on the claim contacts the customer directly, causes stress. You tell them to stop it. Auto and General, Budget Direct, Qantas Insurance, 15 occasions they breached an authority and contacted a customer directly before acknowledging that, actually, you know what, our system doesn't allow us to change who is contacted. Clearly, when they appoint a supplier, even though it's a builder-led model, and they certainly aren't involved in that, it's wild, right? And don't give them an exception, because then when they breach, they go, oh, we thought it was in your best interest that we contact you, or we didn't think the person was acting in your best interest. And also it's like, well, what does that even mean? If they're pushing really hard for a settlement for a consumer, are they not and you decide that what they're asking is not reasonable, even though they're probably just acting on their client's instructions. You decide that's not their best interest, so you're just going to contact them.
Who are they to make the call?
Yeah.
It's the client who knows what they feel is in their best interest. Obviously, they can have advice and whatnot from whoever it may be, but the insurer does not have the power to decide, yep, this is in your best interest, and that's where we'll call it.
Well, in fact, they use best interest a lot when it's in personal advice, because you have to make sure that you, when you're giving advice, it's in the best interest of the client, not yourself. But insurers are actually explicitly not allowed to provide personal advice. So I would also argue that putting that term in the code, they could never actually use that obligation, because if they did, then they're likely probably breaching other obligations. But also, it's just an out. Let's call it for what it is. It's bullshit. 100%. You just want to be able to contact them when you want to, and you want an exception when you do. So it's like, make it simple. We'll respect an authority that contains these items. And as someone who has these, I don't mind if you have to call the customer. You know, they often act like they'll give you these authoritative forms from different insurers. And some of them, honestly, you got to give like your firstborn child, and then you can have a nominee at that point. Like for others, they're pretty good with it. They'll accept the one that we give that's signed. They'll confirm with the customer, and we move on. The other one is like, I have to talk to you 15 times a day to prove it's you. Then you've got to sign this form, that form, certify 15 copies of this, and then we'll respect it until we appoint a supplier, and then, you know, we're going to contact it relentlessly. Like, simplify it. It's easier for everyone. Because as an insurer, when you simplify it, at least when I work there and says that you have to do that, well, then all these little exceptions and outs we have to get rid of when we implement it.
It's complicating everything.
If we don't do that, we've made a mistake. We have to sort of own up to it at that point. So to me, that's why the whole thing needs a review. Get rid of every subjective word you don't need and replace it with an objective word. And then if you can't, which I appreciate there's some standard, you know, like sometimes you can't, minimum standards. So just say, we will offer additional support to you if you need extra care. At a minimum, this includes extending temporary accommodation if you're in temporary accommodation and we have not made a decision. Simple things so that as a consumer, I know that when that happens, I'm going to be able to ask for that care and they'll provide it. Without those minimum standards, it's just motherhood statements. We'll provide extra care to you.
And it's interesting to see some of the insurers that we perceive to possibly be good in sort of managing vulnerable clients. They actually already of their own sort of volition implement some of those sort of things. Like, hey, we acknowledge that, you know, perhaps there's a bit of delay in like getting this expert, you know, report for whatever reason. We're going to extend temporary accommodation just so they feel like that they're being safeguarded and they're comfortable and all of that sort of stuff. So having those minimum standards that even just meet those sort of things that some insurers are already implementing, it's amazing to see such a marked difference between, you know, your client previously where they're so stressed out, then just like a little goodwill gesture like that, you know, it just makes a massive difference for the client.
You have nothing to hide and you give someone a full copy of your file notes and they can read it. How much that helps. Whereas if you're Auto and General, Budget Direct, Qantas Insurance, and you give your file notes and the whole thing's a blacked out page and you say, we've redacted it under these 5 random exceptions, that only acts to reinforce the feeling of a consumer that you're not doing the right thing, that you're withholding information, and that you're relying on this asymmetry to bully them into something. Because often that's exactly what you're doing. So for those insurers that are transparent and open, it really does help resolve a claim, but also it helps maintain that reputation. I think that is that you can have a claim where you can still have a customer after that who's an advocate for your company. Just because they have a claim doesn't mean that they can never be with you again or they don't want to stay with you.
And they would stay with you. If you dealt with the claim well, it was a positive experience for them in an otherwise negative situation. Of course they're going to want to stay because they've proven that, you know, it's worthwhile paying their premiums because they're going to get looked after. It's going to be an easy process.
I think the other thing that the code sort of plays on a little bit is terminology like beyond our control. And it's like, as someone who's worked in insurer, you actually control a lot of people and things. So to then say that an expert report that's not received is out of your control, bullshit. It's bullshit. Because you could appoint a different expert, you have contracts with them, you can force them to do it if you want to. Like, it's just not real. And I think that the code needs to be updated to be really clear on what insurers control. And if you have a builder-led model, probably don't need to say the insurer's name again, then you're choosing to not have control of it and therefore you should be liable when it doesn't work. So if you can't do something because there's a limitation on your builder-led panel, that's you. You're choosing to have that limitation. It's not out of your control. You could go and follow what every other insurer does and has a panel and bring that control in-house, but you choose not to. And if you choose not to, then you should have to have the consequence of it, which is a good segue into enforceable obligations. And then what I wanted to sort of just focus in on a little bit is that the code says, you know, these obligations, you know, that they've selected are enforceable. But then they start to apply some exceptions to that. We've already spoken on the policy exception to that, which, you know, I won't mention again. But then they'll also start to say, they start to try and limit the, like, actual damages of it. So they then start to say, oh, we'll cover, you know, essentially the consequences that arise naturally from the breach, but we will not cover consequential loss. Essentially, I think that's the wording, something to that effect. And so what that means is I couldn't really think of too many scenarios with the obligations that existed where if they were to breach something, and there's obvious ones, right? Like if you're going to do something and then it delays it and then you completely erode the policy benefits, for example. So you have 12 months of temper com. And then because it's out of our control and we didn't get an expert report for 6 months, you then run out of temporary accommodation. It's like, well, I think the code should be really explicit that we'll cover those losses if our delays result in an erosion of policy benefits or actual loss to you. I don't think they should be doing these exceptions and writing them in a way that just narrows and narrows and narrows them down. Because the natural part, at least my interpretation when I was trying to understand this common language that everyone would understand, it seems to be that for a loss that they would cover, it would have to arise naturally, meaning that for a breach of that obligation, it has to be reasonably foreseeable to them that a loss would be suffered. For it to then maybe they would have to then cover the consequence of that. Unless another exception didn't apply, like you delayed something or, you know, you contributed to it or vice versa, there was some other exception. Well, then this becomes very problematic, I would say, legally trying to interpret. If I'm breaching an obligation in the code on a specific thing or a specific time frame, how much damage can really flow when you're trying to restrict it so naturally to what happens? Because the reality is, if you have consumers in a house, right, they have kids and children and dogs and God knows what, if you're breaching the code, in my mind, well, a whole heap of things could flow from you not managing that properly, including things like if you're forcing a consumer to live in a house and they get a mold condition and then they get medical, you know, they get sick because of it. Well, then in my mind, I'm like, well, you should be liable for the consequences of that if it's your actions that have led to those consequences. But because they're really getting really specific and tricky with the wording here and linking it just specifically to the obligation, I think that it's getting so narrow that it would be quite difficult to link any loss to it, because the insurers are going to go, well, no, it's the loss that arises from the specific wording in that obligation. Not broader than that, because that becomes consequential loss or, just because you spiraled when that happened and then that caused a whole heap of other things to happen. We're not liable for any of those costs. We're not liable for non-financial loss or compensation or any of those things. I think this is really sneaky wording in which means that the insurers really will not be liable for too much. So I think it needs to be redrafted so that it's more about the reasonable costs of a breach for us. If we breach an obligation and results in reasonable costs, we're liable for that. Or the other recommendation is to put the consequence in the actual obligation, because a couple in our submission that we do some examples in there around, for example, we'll make sure that our experts are suitably qualified. Okay, well then if you're so confident you'll do that, why don't you put in the obligation, and if they weren't suitably qualified, we'll throw the report out, we can't rely upon it, and we can't get another expert out for the same assessment. Because you know what? Then you'll make sure they're suitably qualified, won't you? But no, and it's like, okay, we'll provide information that, that we have in our possession, and if we don't, we can't rely on that in any future complaint, dispute, or court case. Then you'll make sure that you give them the information because you want to rely upon it in the future. And I think that none of these obligations clearly outline consequences. No. And almost any legislation or regulation outlines the consequences. Or, if you look at the ASIC stuff, it's like, well, you do this. If you don't, there's fines, there's penalty units. They can take you to court. What's an enforceable obligation without a consequence? Nothing. No, I'll use my best endeavours not to speed. And then I get caught not using my best endeavours not to speed. Good luck proving that. But if you could prove that, there's no consequences outlined in there. So therefore, the remedy is getting me to ensure in future that I use my reasonable endeavours to not speed. Like, it's nonsensical. It makes no sense. So I think that, and they might say, oh yeah, but the Code Governance Committee can fine us up to $100,000 for our tax deductible charity donation. But for consumers, I think individual obligations, including the important ones and minimum standards, there should be a direct consequence to some of this stuff. Because for the industry, these bad actors and insurers with poor cultures is dragging your entire industry down. So if you're one of the good insurers, then you should be advocating for exactly what I'm saying because you already do it. But it's these other guys out here that run these cultures of win-at-all-costs mentalities that will not do this stuff, and there is zero consequences for it.
And I think what's worse about that, with there being no consequences, is the consequences that we see every day for the clients. So the consequences that they're living with of the insurer's failings, wrongdoings, whatever it may be, is absolutely enormous. Like, you could not actually put a financial figure on it. Like, you can't.
Destroys their lives.
It completely, but it's okay because they can do as they please and get off scot-free effectively. Which
kind of undermines the whole point, because it just totally, there's no point in a consumer actually raising any complaints, concerns, whatever.
Well, there's no
outcome, because it actually becomes a cumbersome process that will just inevitably delay the process, delay progress, and then there's no outcome. So they've actually wasted time, potentially spent money, and then what? There's no outcome. It just, the power imbalance continues to widen, which is the whole point of this code, is to try and draw that closer, but it just widens it.
And if we're really serious around consumer protection, the implementation of meaningful remedies in the code that a consumer can actually enforce is critical, I think. Yeah.
And that they can easily enforce.
Absolutely.
They shouldn't have to be jumping through every single loophole, trying to disprove all of these get-out clauses, and, it should just be, here it is, and it's being enforced.
Yeah,
That's it.
It's like they're taking the stand, and it's probably something that should be quite just sort of, set in process so they can go through those motions and actually get an outcome. But no, they will have to provide evidence and go through an enormous amount of cumbersome processes.
A consumer shouldn't have to go to AFCA or the courts to ensure that their obligations or the insurer's obligations have been satisfied.
Or to even understand what it was.
Or what
it meant. What was the actual meaning of reasonably believe in the context of that obligation? And you should be able to just walk out onto the street and say to a consumer, here's the obligation we've written. Could you tell me what you think it means? And if they repeat back the way it's written and they understand it, that's the test.
Absolutely.
Not giving it to some consumer advocate that the ICA works with all the time, being like, can you please read this and put the lens of a consumer over it? Because as we've always said, the reality of an everyday consumer around insurance is extremely low. So therefore, when we say plain English, plain, objective English is important. All right, well, we've covered a fair bit there. It obviously hasn't been an overly positive conversation. I think to balance it slightly, they've tried, I think, in some ways to improve certain aspects of it and put more guidance in the code itself, particularly around vulnerability, but, they haven't kind of gone to that next step of what we've discussed a lot around making insurers accountable for those obligations and therefore making the obligations drafted in a way that they are actually enforceable. If we think about recommendations, if you could have one recommendation that the ICA had to implement in the redrafting of this, Ben, what would yours be?
I think probably stricter guidance around the engagement of experts and expert evidence. I think these claims largely hinge on what experts have been engaged to provide expert evidence. We know that. By the time claims sort of come to us, we have clients that are so confused as to who's actually been appointed, whether or not they were actually qualified to comment on the thing that they've assessed. One of the big ones I see is engineers. So you might have an issue where it is largely based on an escape of liquid. So the soil has become saturated. There's an issue with, the subfloor, things like that. They might engage a structural engineer, which is fine, but they probably also need to engage a geotechnical engineer who can do soil sampling and actually can comment on whether or not the soil has actually been appropriately dried, things like that. So there is a distinction between certain experts, and it is crucial to get the right one. Otherwise, you do have someone who is commenting on something that's potentially outside their scope of expertise, and that can drastically change the outcome of someone's claim. So at this stage, with the redraft of the code, it's again one of those things where they kind of outsource to the ICA's guidelines around engaging experts. So again, an insurer can kind of go to that guide, cherry pick certain aspects of it and apply it arbitrarily. It needs to be more clearly defined within the code to ensure that whoever's being engaged is the appropriate expert and that the insured is comfortable that it is going to be the right person coming out to their property.
I think it's a very good point. And again, the ICA just needs to realise that you need to define what qualified is, because there's a bunch of people running around called indoor environmental professionals, and some of them have an online certification from the US commenting on whether homes are habitable and everything about that home. Auto and General, Budget Direct, Qantas Insurance, for example, has a very small panel of IEPs on it. So every other expert has qualifications and expertise that you can point to, be it university or a trade qualification as a builder or an electrician. But you would be shocked to know how many people are turning up, calling themselves something, and they don't actually have the qualifications or expertise. Or just because when they get back to the office, someone puts their name on the report, doesn't mean that that report was written by someone qualified. And this is why it's wild in this industry that can happen, because, again, compare it to other ones that I know that we've all worked in, you couldn't do that. But yet, in this industry, with our code that we wrote, it seems like a lot of this stuff is going through to the keeper, and it's like it's time to tidy up the industry. And for the insurers that are doing the right thing, you're the ones that should be advocating for this. Because it's the harm, to your point, Ben, that comes from that. It's hard to find another example that is so consistently the cause of harm to consumers.
Yeah. Like Rachel, to your point before, kind of comparing to the medical profession, you wouldn't have a cardiologist commenting on, bones.
Yeah.
That's an orthopedic surgeon. That's what they should be doing. So to have, different specialties commenting on different components, it gets you the wrong outcome, and that can be detrimental.
Yeah, you wouldn't have someone who does a first aid course doing a medical report on a customer. That's literally what's happening. Literally. In a similar scenario, to be fair. Rach, your recommendation?
Mine would have to be around disclosure. I think if a consumer, they've raised a claim, it's been declined, or it's, been valued at a certain amount, whatever the outcome may be, I think if they're wanting to challenge that, even if they're not wanting to challenge it, actually, I think they're entitled to know exactly what has been considered, what's been collected, discussions had internal, whatever it may be. I think they're entitled to see all of that, whether the insurer claims that they've relied upon it or not. I think it doesn't matter. It's still there. It's still part of the file. So in one way or another, it has been relied upon, whether it's to change the insurer's tactics, whether it's to finalise the claim, whatever it may be, they're still entitled to see it. And I think that's really important. And then also that would tie in with your point, Ben, is they would then have all the reports. They would then have all the communications with suppliers. They should have everything that has impacted their claim. So that could include actually, you know, this roofer is not qualified for tiled roofs.
Right.
So, you know, it'll then actually provide them with something to, you know, justify, I guess, the outcome of their claim. And that could even be, they could read through all that and go, yeah, actually, fair point, that's fine. It's been, you know, concluded as it should have. Or it gives them the information they need to make informed decisions or, you know, raise a complaint or reopen the claim, whatever that may be. I just think it's important that, you know, they have that information about their own home and their own circumstances.
It's amazing in 2026 that is something that we're asking for.
Literally.
Like, it should just be what's done. It's not, so let's put it in the code and make it a requirement. It would solve so many of the problems that we talk about if it's about qualifications of experts. The reason they don't put it in their report, the reason they hide it away in some system that consumers don't have access to is because if they told consumers, this is the person that's turning up, these are the qualifications they have, they'd go, no, thank you, I want someone qualified. And it's like this whole industry at times is built on withholding information from consumers to enable the machine to work. And it's like, if that's the only way the machine works, well, then it's fundamentally broken and therefore they need to fix it. And if you are disclosing stuff because you have done the wrong thing, because your independent expert's not as independent as you want to make out in front of AFCA, then so be it. It reduces disputes. And for consumers, it will really validate them when they're struggling so much mentally, feeling like they're being gaslit when they know their property, they know what's going on, and there are people that are turning up or insurers are saying things to them that's contrary to that. So, yeah, massive in terms of improving a whole heap of things. Liz, yours?
Mine is really around having minimum standards for customers experiencing vulnerability. I think the extra care framework in principle is great. I think some of the philosophies that are included in that are really important, I think, for people that are dealing with vulnerability as part of their insurance claims process. But we need to make sure that those people are given consistent support across all insurers. So we don't want it to be left up to the insurer's internal processes or their operating model, or giving them the discretion to be able to, you know, give a customer some, you know, extra support if they need it as part of that claims process. So having minimum standards in the framework, which should then be included in the code as an enforceable obligation, I think will really improve, you know, the opportunities there.
I think that's right, because the head of claims might think that's really important, but the CFO won't. So if you're not setting a minimum obligation expectation on the industry, some insurers are going to cut anything that costs money in that space. And the reality is you do need to spend some money at times. My recommendation would probably be that self-regulation's a myth and we should just get to legislating this, and ASIC and others should start to actually just write obligations and write legislation in this exact space so that consumers get some protection, some of the harm is reduced. In the absence of that, I think the ICA needs to cut the bullshit, would be my recommendation, because trying to trick people into thinking that what you're doing is achieving these outcomes you put in a media release only reinforces the perception from people that you cannot trust this industry. So what I'd say is get the lawyers out of the room, start with your objectives that you're trying to achieve, get the insurers in the room and agree some minimum standards, and then just put that in plain English. That's your starting point. And I think you'd end up with a redrafted code that is far easier for consumers to understand and actually enforce. Because at the moment, I think we're going backwards, which is a pretty sad outcome off the back of some really terrible findings in reviews and parliamentary inquiries. And we've seen it, you know, time and time again, consumers are suicidal. I've worked in claims teams where that actually happens. It's horrendous. And I think that the industry needs to realise that the minimum standards we're talking about here will save lives or families or marriages or anything else. It's not us as advocates sitting here saying this because it's going to help us. In fact, if you go and implement all these things we're recommending, we have less work. But the reality for us at ClaimServer is that we've seen the harm this causes time and time again, and we want to see some change. And it'll never go as far as what we'd like to see it go to. But, gee, just getting that minimum level that insurers shouldn't fall through will go a very long way to helping consumers and preventing some of the harm that happens in this space. Final thoughts from anyone?
I just hope that we'll be back here again talking about a new and improved version of the code, and it'll be a really positive episode next time.
Here's to hoping.
Yes. Hopefully it doesn't take as long as this one took to draft
Yeah.
after the last recommendations, but I agree. All right. Thanks, everyone. That's a
you.
wrap.
Thanks, everybody.
Need a hero. I need a hero.